728, 910, 917, and 510. All right.
7:10. A longish first couple of segments.
Yeah. Yeah, they don't have any commercials.
We had a guy walk in today, heard us on the radio. In fact, we can actually talk about that. Just kind of.
So, look, does anybody listen to us on that? Okay. Where do we want to start after the intro?
Well, just, hey, so just talk about, hey, appreciate one of our listeners stopped by and added to his account this week. It was great to see him. And we'll just go into just, I don't know, business summer stuff. Talk about crowdfunding, marketplace lending.
All right, here we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hanf of Pacific Private Money and Nam Phan of Pacific Private Money. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. The certificates are not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is random trivia.
Random again?
Random again. Yeah, I got to keep you guys in suspenders.
Okay.
Mark, take it away.
Well, for new listeners to our show, we're a few guys like sitting around a bar having drinks, talking business. Although we don't have the drinks today, although Edward's drinking something really interesting.
It's an energy drink.
Yeah, but it's called Go Girl. So
Go Girl.
I love that you have no issues with your manlyhood. You're not afraid to flaunt it. In fact, it's even on the video as we're recording our show right now.
It tastes excellent.
All right, well that's good. So great week. In real estate. All the papers this week were, yet again for another month talking about how strong the market is. It's kind of interesting. So, at Pacific Private Money, we're in both the lending business and we're in the investment side. We work with alternative investments because all the loans we make are made with private capital. So we need to, as a business, be concerned about, where the economy is heading, where real estate prices are heading, how everything is trending. And I got to tell you, as someone who's been through, I've been in the real estate industry for 35 years. And so I've been through many cycles. Yep. And even when I was growing up as a kid, I remember my dad was a developer in the 60s and 70s. And I remember going through this period in the 1970s where, real estate prices through the 60s and early 70s, they went up a little bit every year, nothing to speak about. And then this phenomenon happened, which was brand new to our generation, which was in the 70s, all of a sudden there was this real estate price appreciation.
Which is brought on the Prop 13.
Right, exactly. And so, but anyway, we've had multiple, boom and bust cycles in real estate. And obviously the most recent one that, we all went through, and all three of us, felt the impact of the real estate recession in 2007, 8, 9. And so, and I'm at an age now at 57 where I, can't afford to weather the kind of hardship that I weathered personally in 2007. And I was in a different industry back then. It was more on the real estate development side. And like many in the business at the time, we didn't do a very good job of reading the tea leaves. So what I'm trying to do differently this time around is try to read those tea leaves and be mindful and study what others are saying, and especially the ones who called accurately the real estate recession. In fact, we just went and listened to someone recently that was one of those who called the real estate recession back in 2006 when he was saying that prices were overpriced and get out of the market now, and was widely booed
But here's a big difference, though, is the fact that Pacific Private Money, you don't develop real estate. You don't buy real estate.
We do not.
You lend real estate.
We only lend on real estate.
And you're lending at conservative value. So even if there's another correction, unless there's an absolute apocalypse, your investors should not lose money.
Well, and exactly, and you took away a little bit of my thunder.
Oh, I'm sorry.
And that's quite all right. No, because that is the point, is that we are, so I'm not a real estate developer looking to try to predict the next cycle, but I'm a lender trying to predict the next cycle. And so what was interesting when we first got into this business in 2007, 2008, the business of lending with using private capital, but making real estate loans to people who weren't getting money from banks. We were lending generally then at a loan to value of 60 to 65%. That seemed to be the norm. And then as the real estate market corrected and recovered in 2012, 13, 14, 15, most in our business bumped that loan to value ratio up to 70. Yeah. It's still there for the most part. And that's the good news. We haven't really gotten to a point where we're chasing the banks at 80%, and that's a good thing. But I'm still looking ahead, trying to listen to those people who are, especially the ones who were right the last time. But my point in bringing that up was none of them are predicting. I mean, really, we're all kind of holding our breath going, okay, well, it's been a pretty good run, and historically speaking, we're kind of there right now. So what's happening? And the good news is that still, the statistics that are coming out in the papers, which is, of course, a lagging indicator. They're looking back and seeing what happened in the summer, what happened in August. Those sales are good, but trying to look forward, trying to predict where we're heading in terms of pricing, appreciation, affordability, anything else that might be happening that could impact real estate prices. The news is still continues to be good. So for the most part, as far as the eye can see, which for most of us is maybe 18 to 24 months ahead, we're really not seeing any correction imminent. We know it's coming because the cycle is, it's econ 101. It's going to happen. Real estate cycles, economy cycles. But the good news is that so far we still have the parameters that would support continuing real estate strength. And economic strength. The IT industry is still going strong. The stock market, geez, everyone's saying it's overpriced, but it keeps going up.
Yeah.
Yeah.
Well, again, if you're making loans at conservative values, and even if there is a correction,
and that's the good part. So if you're an investor in real estate or real estate secured notes, keep that in mind. That it's probably a good time to start looking at being a little bit more conservative now, and we certainly are. At Pacific Private Money on our lending guidelines, we're looking at we're taking a harder look now. We're not necessarily just listening to our borrowers. What did one of the Fed chairman call it one time? Irrational exuberance.
There you go. And on that note, we're going to cut to our first commercial break here. All right, random trivia. In which 1940s Disney film would you find a rabbit named Thumper? Right, that's the question. Email or call 888-912-1190. If you're the first caller with the correct answer, you're going to win that tanning certificate. Don't touch that dial. The best of investing. I'll be right back. What's interesting is
I'm looking at straight at these zeros going.
So I got an email from this broker who has the building. He has a listing on the building, like right across the street, or right in my backyard in Sunnyvale.
Sunnyvale, yeah.
As it turns out, my old tenant is the tenant.
Oh. The one that kind of had struggled with the rents for a bit there with you?
I'm trying to remember how this was. No. They were a good tenant, but when the market kind of corrected, they were able to move. It was okay. They were a decent company, and they're growing quite a bit. It's too large for me because it's 59,000 square feet. And they're going to want like $250 a foot. But the rents are really low now. And you can buy it today at a mid 5.5 cap. And the rents, they're projecting in 2020 the rents to be here. Well, how hard to get here? I think their building's nicer than mine.
Wow. Really?
I haven't seen the inside, but I've seen some of the pictures. So it's like, I mean, you can get long-term financing. It's in a great area. So, I mean, do we know anybody who, we're talking about a $14 million purchase price of that. Yeah, 14 to 17 million.
It's got to be somebody in our network.
Yeah. That's the one thing we haven't figured out how to really leverage is from time to time we get people saying, hey, do you have any equity investors? Do you know anybody? And, finder fees are finder fees. I'd like to insert myself into something like that. But I don't know.
It'd be good to.
That's something we could. Let's talk about that.
That's something, that's another thing in the database that
Right.
probably ought to be flagging people
Yeah.
or tagging people as investors who we would then separately, because I don't want to blast to everybody, because that,
Right.
I think that cheapens the
Yeah,
brand.
yeah, you're
But I
right.
want to blast, I want to set up, I think we should set up a tag it at a certain part of the database of real estate investors and say, just keeping you in the loop since these things come across our desk all the time. Here's an
I
opportunity.
mean, kind of interesting if there was like an LLC put together to own, because I manage my building by myself because it's so easy. And it's building is very similar to triple points and all that
It's
stuff.
in Sunnyvale?
Yeah.
So I'll take off and we'll just go right into, from there, from the things we were just talking about the growth in crowdfunding, growth in marketplace lending, and all the money that's entering into that field.
Okay. There we go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hunt and Nam Phan. First trivia question was, in which 1940s Disney film would you find a rabbit named Thumper?
Is it Bambi?
Yes, not Godzilla meets Bambi, but just Bambi. All right. So, Mark, let's move on to the marketplace lending.
Yeah, so talking a little bit about how, in the last segment, how economic indicators are such that, the news is still really good out there. We're looking forward and trying to predict and make moves in investing that would at least, be aware that we're probably near the end of this current business cycle and a real estate cycle. But notwithstanding that, we've got this growth in crowdfunding and marketplace lending that's really taken off. And it started taking off in 2013 with the passage of the Jobs Act. That was an act that allowed a certain type of capital raising that prior to the passage of the Crowdfunding Act was really limited only to the mostly wealthy people and people who you had a prior relationship with. So for example, prior to 2013, we weren't able to be on the radio talking about the alternative investment opportunity of the Pacific Private Money Fund, because funds like that were only available for, you were only able to share those opportunities with people who you had a prior relationship with. And so in 2013, that requirement was eliminated for a new type of syndication being, an offering for raising capital for, for real estate related purposes, or in fact, many different types of purposes. So the crowdfunding, it's interesting in the real estate space, crowdfunding has been so popular that these new fintech and marketplace lenders, many of whom have launched and exist in San Francisco today, they're raising so much money that those that are side have found that they can't find enough loans to make with that money. And so now they're changing their business models, and some of them now are doing things like buying real estate and allowing you to be an investor in a piece of the ownership. And so,
Where do you see the risks being?
well, that's a good question. When you invest, let's say, in a trust deed, many people have been doing trust deed investing for decades, and so some of our listeners out there who have invested in trust deeds, and some of them may have invested in mortgage pool funds. And now you've got these new crowdfunding companies and marketplace lenders out there that are also raising capital. You have to ask yourself, what is the collateral? What am I investing in? And there's even funding for REITs. And so then there's the discussion, well, what is a REIT? And is a REIT the same thing as investing in a trust deed? And in California, mortgages are called trust deeds. And so trust deed investing in California is essentially investing in a note, a promissory note, which is a contract, but it's got collateral. It's secured by a recorded deed of trust, also called a trust deed. Now, some of these marketplace lenders and other crowdfunding sites, while they may be lending money or buying real estate, you don't necessarily get an ownership interest or a direct collateral line to that, or a direct line to the collateral of the loan or the real estate itself. So that's something you need to kind of investigate. You need to read the FAQs in those websites before you invest, because oftentimes what you're getting when you invest with these companies is a promise of repayment by the company. It's like a corporate guarantee, which is nothing more than a guarantee that as long as the company exists and is profitable, they will stand behind that.
A debenture.
Right, that's another
secured-
fancy word for
Yeah,
it.
that's secured.
So if you think you're investing in a secured alternative investment option, you may find that it actually isn't secured, that the collateral is not the loan itself, because you do not have the right to foreclose on that property as an individual if that borrower whose loan you invested $10,000 on a, let's say, $150,000 note, he stops paying, the company may choose to foreclose, but if they don't collect all of the money that loan, is the company going to guarantee to make you whole if they only collect $125,000 on a $150,000 note? So there's a number of nuances, but the point being that you, as the investor in that note, do not necessarily have a direct right to foreclose on that property. So it's something to consider, and it's investor beware, buyer beware. It's really, really important with now all of these online investment opportunities. Many of them that sound too good to be true because they're offering, double-digit yields, 12, 15, 18, 22%. Be careful. And we know what we're talking about because we have a real estate debt fund that pays single-digit rates. We pay out a little bit under 8% on an annualized basis through the Pacific Private Money Fund, which makes real estate loans in California. And we compete in the market, and we can't charge a higher rate than our competition, or at least a much higher rate than our competition, maybe a little bit higher, because the market's too efficient for that. And people aren't stupid, and they're not going to pay 12% when they can get it down the street for 8%. So, California-based company offering double-digit yields, you have to wonder, well, how are they achieving that? Who's paying that rate, and how secure and safe is that underlying asset that they're creating?
Well, my last check from being invested with the Pacific Private Money Fund on an annualized basis was about 8.14%. So
Nice.
we had a little bit of a blip up.
Well, we distribute 100% of the income on an accrual basis from the fund every month. It's a monthly distribution. So for more information about the Pacific Private Money Fund, please go to our website, pacificprivatemoney.com. We do have information and videos you can watch or information you can download. We don't give out a lot of the paper information because some of that stuff we don't make available on our website because you do need to qualify to be an investor. So if you want to see the offering, for example, or the executive summary on the fund, you would want to give us a call at 415-883-2150 and talk to one of our friendly agents, and they'll be happy to shoot you something.
Okay. And when we come back, we're going to get more into that.
Yeah.
Okay, second trivia question. Which state is directly south of Virginia? Which state is directly south of Virginia?
That's a trick question.
888-912-1190. Don't touch that dial. The best of investing. We'll be right back. I'd like to ask you about, have you say about someone who heard us on the radio.
Yeah.
That's always kind of nice.
You know what? Maybe I can chime in too.
Yeah.
Kind of go back to the
Please do.
crowdfunding.
Yeah, I know.
And
I'm
just
waiting
say-
for you.
Well, like I said, sometimes I have
Once
a
I
hard
get
time.
going, I know.
Yeah.
I talk fast.
It's
and
so
I
funny.
don't
He
take
told
a
me
breath.
that in the car yesterday.
I like
he goes, hey, when we do the radio, he goes, I'm not sure when to like chime in because Mark's voice is a certain way.
It's my fault.
No, it's not.
No. It's
No,
I
it's
said that sometimes I just have to kind of like interrupt.
the chicken's ready.
So do you want to start?
Yeah,
Do you want to
I'll
talk about
just
the guy that came in today? And
you know what? I want to.
or talk about it hurt us on the radio because we're two people now that said they heard
Yeah,
us on the
the
radio.
last 2 days since
Really?
we got on. Brought up.
Since we talked to
Yeah.
Keith, we just, coincidentally,
Yeah,
two
coincidentally.
people, one guy walked in the office today, Brooks, who's an early investor,
Okay.
and just wrote a $100,000 check. As he said, I heard you guys on the radio say that you got all these loans, you need to put the money to work. I said, I can put the money to work today if you write a check today.
Wow.
Which
And he's
I'm
already
actually
an
transferred
investor.
He's
tomorrow.
already is. Yeah.
Yeah,
He's
he's an
already 3
existing
years in.
investor. So
And then somebody yesterday who said he heard us on the radio older gentleman, so we printed and mailed him the.
And did they say they heard the commercial or they heard the show?
I think Brooks said.
Oh, you know what? We didn't,
Or no, the guy yesterday said it. He heard the commercial.
today he said he heard us talk about how we need more money. Like
Yeah.
we're have more deals than loans.
Yeah, because he said, "Hey, are you
Or
going to be on
deals
the
of
show
money.
today, Don?" So he
Yeah.
listened to the show.
That's what the show.
I'm like, what?
Well,
Yeah,
I'll just go right into asking another question too, just about, tell us about people who've heard us on the show. Ready?
Mhm.
Here you go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Kahn and Nav Vaughn of Pacific Private Money. Second trivia question: which state is directly south of Virginia?
West Virginia.
No.
Tennessee.
South.
That's what I
West.
thought.
No, North Carolina. And
Oh.
yeah, that's not a trick question. Yeah, because I remember buying
That's
fire.
not trivia. That's like a geography question.
Yeah.
What's else trivia?
That's yeah, because we were having to buy fireworks in North Carolina, but not Virginia.
I should have known. I used to live in North Carolina. Believe it or not,
Which part?
in Fayetteville. Yeah.
North. That's actually what's south of North. South in North Carolina, isn't it?
I think so.
Oh.
I was 2 years old when I left.
Oh, okay. Well, okay. Then we'll give you a break on that. So, no, we haven't heard from you yet.
Hello.
But you are in the studio here. Yeah, you were telling us off air. Some people had recently heard us on the radio, and what did they say?
Yeah, no, it was great. We had a couple people, one who walked in this week, who had been an investor with us, or who still is, and heard that we have high deal flow, and came into after his investment. The great news is we'll be able to deploy his capital immediately. Oftentimes, when people call in and they ask where they're investing, how long does it take for your funds to be deployed? Because initially, your funds go into a subscription account, which is non-interest bearing, until we have loans that would trigger the. But like we've had over the last several months and during the summer, we're deal flow high, funds low. So the new investors' capital is going to be deployed immediately.
And if I remember correctly, the fund has first crack at all the loans that come through the office. So
Exactly.
you can kind of cherry pick the best of the best.
Exactly. We're not putting every loan that comes across our desk into the fund. I'd say it's a pretty small percentage, and typically they're the best deals.
Okay.
Not necessarily small. I guess probably more appropriately, it's less than 50%. And so, just for clarity, if you're listening and you're wondering, well, how do you fund the other deals if the Pacific Private Money Fund is the lender on let's say 40% of the deal flow that we see at our office, how do you fund the other 60%? And we still do that with individual investors. There are investors out there that prefer to invest directly in notes, and we still work with those, although I will admit that our business model is one where our goal is to raise sufficient capital in one or more debt funds like the Pacific Private Money Fund, so that we have enough liquidity that we can use that to basically fund the majority of our loans. Another thing that's worth noting is that we have a website that is going to be launched soon, not quite ready yet. You could go to privatemoneyloans.com today and you'll see something, but you won't be able to invest in a note. But that is going to be a portal for us to also sell notes directly to the public. So that's going to be another way that we're going to make note investment opportunities. And so I think we're going to continue as a company to sell both notes directly as well as provide opportunities to invest in funds. And which one is best for you really depends on the type of experience you have. If you don't have experience buying notes directly, you probably are better off investing in a fund. And we could do a whole show around why that would be, but suffice to say that it's very competitive to get high quality notes on a direct basis. And so unless you can make decisions very quickly, you're probably, as an individual, going to have a hard time getting the best notes, which is why investing in a mortgage pool fund, where which has a lot of other, great benefits that an individual note doesn't have, it's probably a better a better investment opportunity for you to consider.
Well, also the fact that when a borrower comes to you and needs speed, rather than risking going out into your client base, to say, hey, Mr. Jones, do you
Who's
have the money?
looking-
Yeah,
who's
who's
looking
looking? You got
money?
money right
Yes.
now? And then they say, well, I think so. I got to check, blah, blah, blah.
Send me the information. I'll look at it and let you know in a couple of days.
Yeah.
It's like, well, wait a minute. This guy really needs. I got to close by Friday.
Exactly. And this way, if you got the money in the fund, you can go ahead and close it, which is one of the reasons why you start the fund.
Yep, yep.
And by the way, for those new listeners, you pay on a quarterly or monthly basis?
So we pay on a monthly basis. Most debt funds or other real estate related type of investment funds pay quarterly. And again, there's nothing, wrong with paying quarterly. It's just that the type of fund we have, since it's a very simple fund, all we do is make real estate loans. We're not investing in real estate or doing other types of investments. It's easier for our fund administrator to do the accounting on a monthly basis, and so we're able to provide that. It also allows you, if you are a growth investor versus an income investor, meaning an income investor would take the monthly distributions in cash and maybe live off that or do other things with that money. If you're a growth investor, you can have your monthly earnings, buy additional shares in the fund, and you get 12 compounding periods versus 4, which, if you remember your math from high school or college, compound interest increases based on the number of compounding periods.
And compounding monthly compared to quarterly, it actually does make quite a big difference.
It's a nice boost, yeah.
Yeah,
It's,
and I like getting those monthly. Seeing
yeah,
those monthly
over the last several years, our compounded yield has exceeded our distributed yield by about 30 basis points, so a third of a percent.
Nice.
Yeah, it's pretty cool.
And right now, you're currently paying
Just under 8%
Just
on
under
an
8%.
annualized basis for the year. I think our trailing 12-month distributed yield is about 7.9.
Well, I tell you what, we got a couple of minutes before we have to cut to a break. You guys have any deal of the week, or you want to just talk in general as to why?
I think Mount has one, don't you?
Yeah, we're this one's not closed yet, but it's something that will be.
Well, that's why
closing
it's a deal of the week.
Yeah,
That's right.
it's a lot actually. It's a developer approached Matt in our office, who's our construction specialist, and it's a refinance acquisition loan, and we're actually going to provide a loan credit facility for some of the soft costs to complete entitlements, which is very, very uncommon for a borrower to be able to get. It's something that we are able to do. So just want to put it out there that these types of loans are ones we'll look at, and we have the resources in-house to be able to.
Where's the property?
Property is in Northern California. I don't have
Okay.
specific
And
location.
what's the loan to value?
55%. The main thing is the soft costs. Typically,
Yeah.
Most lenders won't lend on
Is it for a personal residence?
It's a development project, so I think it's a single-family residence that will be built on it.
Okay, just one home, not a bunch of homes. Yeah.
So something else worth noting is that there's 2 types of loans that we make at Pacific Private Money that is kind of our niche product line, and we specialize in doing loans that not only conventional lenders are not able to do, but other private money lenders, other marketplace lenders in California struggle making. And those 2 types of loans are loans on a primary residence, also known as a consumer loan, and the loans that Nam just talked about, which are construction related. So we have been developing our construction loan programs, our ground up construction loan programs, as well as our land and development loan programs. Now, keeping in mind that we do realize that many of those types of loans were the ones that went south, 10 years ago when the market turned. But again, we're very, very selective in the types of deals we're looking at. We're not, operating under irrational exuberance. We're looking for strong borrowers with experience. Yeah, right, exactly. They're not development on that kind of basis. But again, if you are a contractor and looking for other opportunities, give us a call.
All right, cutting to our third trivia question here. Who did George Bush Sr. defeat in the 1988 election? And here, this is not geography, this is history. Presidential history, all right? Call 888-912-1190. If you're the first caller with correct answer, you're going to win that tanning certificate. Don't touch that dial. The best of the best. I'll be right back.
Okay, so I want to chime in on going back to marketplace lenders
Yeah.
after this.
Okay.
Just to add.
Cool.
Oh, because we haven't gotten the email times.
Oh, yeah.
Email.
Yeah, so we're on our, this is the 9/17
This
one,
is
the
the
longest.
9/17.
Yeah, the long one, okay. So he can do that, and then you can do the email.
Okay.
Do Nom first, too. Make sure I don't hog all the.
No, don't worry. Hey, it's not the talk. I'm good too.
What time are we presenting tonight?
7.
7, okay.
I just did a quick Waze check and it was an hour and a half drive time, but I'm sure it adds 10 minutes every half hour between now and 5.
Well, welcome back to the Best of Investing. Edward Brown here, along with Mark Hahn and Nom Fon. Who did George Bush Sr. defeat in the 1988 election?
Dukakis?
Yes. There you go.
All right.
You got it.
Right. It's been like 2 months.
Mike
Yeah.
Dukakis.
That's right. So you remember that. And okay, Nom, you wanted to mention what?
Yeah, we were in the prior segment and the one before that, we were talking a little bit about marketplace lenders and private lending in general or regional. One of the things we're seeing are not only marketplace lenders buying properties and switching their models, but they're also buying loans from private lenders like us, from the regional lenders. And to me, that tells me that they're running and they're pivoting. They're getting away from origination. So they're getting away from doing what we're doing, and they're actually relying on us to a certain extent for their business, for their deal flow. So, it confirms or reaffirms the value and experience that regional private lenders have and bring. So the ability to do that deal of the week we just talked about is not something you can do from a distance, from a national level experience in the marketplace. So it just makes, it reaffirms what we do locally and what other regional marketplace lenders do in their markets. They're the experts. So for investors out there, to invest in a firm like ours versus national marketplace lenders, I think makes a lot of sense. Or regionally, looking at if you want to invest out of state, look at the local regional marketplace lenders versus some of these national firms.
Well, that kind of almost leads me into our email time here where somebody gets and asked, I want to come to your seminars, but it's hard to go to Nevada. That's where your office is after work because I live in San Jose. Yeah, I'd say so. Do you ever come down my way? So maybe do seminars once in a while.
Yeah, and I wish we were emailed that question last week because we just had a session in Mountain View. Great turnout. It was our first time being out in the marketplace outside of Nevada. So there will be more to come. But in the meantime, just keep on the lookout for other events that will hold.
Now, the audience should probably email you to get on your list so that you can send out announcements, right?
Yeah, they can email me, nam@pacificprivatemoney.com, or they can call in to our office at 415-883-2150. Go to our website.
We'd love to get requests for where you'd like us to come to make these presentations. So when we were in Mountain View, that was our first Silicon Valley presentation. We're thinking about doing an East Bay presentation. Previous to that, we've been, in Marin County venues, which again, we understand, in the middle of the week at 6 or 7 o'clock at night, it's tough to get around. So we're trying to go to where the market is.
Yeah, and in the meantime, when we're not in the market, we also do webinars and understand webinars are different from face-to-face meetings. We prefer the face-to-face, but for those who want to be able to at least virtually attend, the webinars are one option as well.
Okay, so all they do is at least go to the website and sign up that way.
Yeah, or call in.
And Mark, email comes in, it says, will you loan on a manufactured home?
We do get those calls from time to time, and the answer is it depends. So we wouldn't lend on a manufactured home in a mobile home park because in that situation, we don't get real estate as collateral. We get a manufactured home as collateral, which by itself is not considered real estate, and it's actually not.
Well, you're renting the land if it's in that case, right? Because that's a mobile home.
Right, exactly.
But a manufactured home, you can.
Are in so-called mobile home parks. Again, we're just, the term mobile home park usually contains anything from so-called park models, manufactured homes, etc. They're essentially, for all intents and purposes, the same thing. But we do get calls from time to time where it's real estate that the borrower who's calling, he owns the real estate. There's actually a foundation and the manufactured home's placed on the foundation. So in that situation, for all intents and purposes, it's a house.
It's a
Right.
regular house,
It just has, it's just not what we call stick built.
Yes,
It's
exactly.
kind of glued together.
And some of
Two
those
pieces
houses
that are
I've
driving
seen,
down the
they
freeway.
look- They look really
Oh,
nice.
yeah, they are. No, it's they've gotten, the technology has gotten fabulous on those, and you can get, some pretty, large square footages on those, multiple pieces that they can place together. So really, it just depends on where and whether you own the land. But yes, there really isn't any scenario we won't consider as long as there is a true real estate collateral component where we can get, a recorded deed of trust
Yeah.
on land.
And an exit strategy, because you want to know how you're going to get paid off.
And the exit
Right.
strategy. Yeah, we're not really in the long-term lending business. We are a plan B when plan A fails. And plan A for most people is conventional financing. It's that 4% money out there that you all want when you buy or invest in real estate. But for many, many reasons, that is sometimes not an option. Sometimes it's speed. You got to close quickly, or maybe you're self-employed, or maybe you're going to fix and flip the property and your bank is not going to make you that loan. So we're really, out there to do the short-term financing is what we specialize in.
Well, that's my question is, who wants to borrow at rates? Generally, what do you charge a borrower?
Between 9 and 10%, more often closer to 9 than 10. But we base our pricing, on the metrics of the deal. We look at three components of the deal: the borrower, the real estate itself, and then the transaction. What's the situation? And somewhere in between the borrower, the transaction, and the real estate, there's a component of distress. Typically, it might be we're running out of time. It might be I'm self-employed and I can't prove my income, or it might be I have all my equity tied up in my existing home and I don't want to sell it first, but I want to buy a house I've got my sights on. Can I cross-collateralize on two pieces of property? And we love doing that. We do that all the time. Banks won't do that. So, but we're really not making the 30-year loan. So like the manufactured home question that you had for me, generally when someone is looking for financing on that, they're looking for longer term financing. And there are companies out there that specialize in manufactured home housing, and we could always refer you to a number of those products. So generally, though, that we're in the short term, 12, 24, 36 months, that's generally the realm of the loan applications we see.
And if I remember correctly, one of the distinguishing factors between your company, Pacific Private Money, and some other private lenders is the fact that you will do owner-occupied loans.
Right, we were talking about that
companies do
earlier, right? And the reason they don't is because with the passage of the Dodd-Frank financial reforms, they really put a lot of regulations on lenders when it comes to making a loan on a primary residence. And I think they went overboard, the government, when they came up with these regulations. But whether they did or didn't, we have developed the appropriate underwriting guidelines, and we have the requisite licenses, and we've got the software and the skill sets with our staff to be able to accommodate all of those various lending guidelines and make loans on primary residences using private capital. And that's something that the vast majority of private lenders in California have elected not to do. And we started doing it 4 years ago, and it's funny, there are more and more companies that are entering that space now because they are seeing that, yes, it is a lucrative space.
Yeah, so a lot of the loans, from the audience listening, I'm thinking, you're making loans at 9%, sounds risky. But like you said, the transaction may be in distress, but the borrower isn't necessary. It's not like the borrower says, I'm going to file bankruptcy if you don't give me the loan. It's more a matter of speed that they need to close their transaction quickly.
Yeah, and I'd love to make loans at 6% or 7%, but our cost of capital is such that the only way we can entice investors to provide us with money is to provide them with a minimum yield that motivates them to invest with us versus investing with the stock market or buying municipal bonds, or so we're in a marketplace where we're competing for capital. And so we get that capital, and we're able to get it at a cost of around 8%. So we have to lend out between 9 and 10% to actually have business model that works, right? So that's the reason behind our pricing. And then the other part of it is, if you absolutely positively have to close that real estate transaction by next Friday, we can help.
All right, don't touch on it down. The best of investing. I'll be right back. Yeah, we're circling over just a little bit.
Perfect.
3 seconds.
Yeah, that's fine. That's why I do the ones earlier, shorter, just in case we do have the section time. Yeah. And so we just have 5, 7, 5, 10 to close it out. How do you want to close it out?
I never met a question I didn't have a 5-minute answer.
Okay. So what we're here for.
Yeah. I'm just practicing for tonight for our 2-hour presentation.
I know.
What are you fighting? Looking forward to it. Fortunately, this we transferred it pretty quickly once.
That's nice.
What are we going to talk about for the last 5, which is really 4?
I'll talk about going out and doing lunch and learns to the real estate
Oh,
community
nice.
and mortgage
Yeah.
community.
And it'd be nice seeing any stories you have. Any recent stories. Like loan recently, like why did someone come to you recently? Just generic, what was the last loan that you did?
Another deal of the week, it was just kind of a straightforward, third that became a second, right? The one that's closing, I think, Monday.
Well, if we got time, you could ask me. I can do that quickly after Nam does that.
There you go. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf and Nam Pond, both of Pacific Private Money.
Yes, we are.
Nam.
Yeah, so I just wanted to mention, we talk about the one side, the invest side, but on the deal side, it's all the time to real estate offices, to real estate organizations. In fact, you and I just did one earlier this week to the Petaluma chapter of the North Bay Association of Realtors.
Yeah, they had over 80 people there.
Yeah, it's great. And it's interesting because you can never tell the story enough of how private money can help borrowers in distress. And same thing applies to presenting to mortgage brokers. A lot of times they just don't know that if somebody doesn't qualify for the loan, that there might be an option, typically a short-term option for that client to be able to get that house through a private loan.
And the best part is you're not competing with the mortgage broker, but you're actually helping them because they can refer the deal to Pacific Private Money, close the deal, and then when the borrower is in a position to refinance, that mortgage broker captures that client again.
Exactly, and on purpose too, our loan products aren't designed to compete with conventional lenders because that's where we know we get our business. Some other private lenders actually may have a similar product to ours, but they may also have products that are competing with conventional lenders. So we don't compete. We always refer back to their firms.
Right. That's worth repeating. There are a lot of private lenders out there that do both conventional financing and private financing within their office. And so that's not a company that you're going to want to refer business to because they can potentially take your clients. And so we have a refer and recapture program, which means that if you refer a client to us, we will make sure that you have the first opportunity. And you may already, because you may manage your client database such that you know that you are going to take that person out of our pricier loan with a conventional 3.5%, 4% loan.
Refer and recapture, is that anything like catch and release?
It is.
Let's see.
Yeah, we don't keep
Fishing.
Well, and it's funny because we don't, other than our flipper clients and some of our contractor clients, we really don't have a tremendous high percentage of repeat clients because a lot of people come to us. It's very random, right? It's they didn't expect to have to use a private money loan for their real estate transaction, but because of some unexpected situation or circumstance, they've decided, yes, it's going to cost more to acquire this piece of real estate, but we really want it, and so we're there to accommodate that. And it's a great plan B when plan A is no longer an option. And so it's funny because off the air, you were mentioning, Edward, that sometimes we really don't drill in this thing. Who who would pay 9% for money? Why would you do that? Well, again, we make loans that also make loans that conventional lenders don't make. So we made a third mortgage lately. Now, you have to hear the rest of the story. The first was, a 3% loan. There's only $20,000 remaining on it. He had paid it down over the last 15 years. And so, so it was really, we looked at it as being a junior lien. Yeah, it's a third, but it's a junior lien. That the combined loan to value with the first, the second, and our proposed loan was still 55% of the appraised value. So why wouldn't you make a loan like that? And we were able to charge the guy 12%.
Yeah.
So, and he was willing to pay it because nobody else would make that loan.
Well, he also didn't
what's
want
wrong
to
with that
destroy
loan?
his 3% first
Right.
mortgage.
And it was a business purpose loan. That was the other thing. He's a general contractor and he's using this for another project. And so we were able to investigate, all sides of it and make it. And he's a repeat borrower, so we know this guy's good for it. So anyway, there are situations we'll look at all the time. For more information, pacificprivatemoney.com, pacificprivatemoney.com. Check us out.
Yeah, at least get on the list for future dates for webinars,
Newsletters,
or
information.
newsletters,
Yeah, we're always adding stuff to our website and
very
stuff,
transparent.
videos to watch, all kinds of fun things.
Great. Thank you again, guys, for joining us here in the studio. You only live once, but if you do it right, once is enough. I like that. And
I still want to live twice.
yeah, then you meet James Bond, right? Remember that movie?
Yeah.
And the best view comes after the hardest climb. That's true. You kind of look back and
Did you make all this stuff up?
no, I wish I did. But,
No,
no,
go
these
backpacking in the Sierras a lot. There's some great views from the top of those 13,000
Actually,
peaks.
right now is a great time of year to go too.
That's always
Oh,
my
yeah.
favorite time. Yeah,
Yeah.
that's when you go is September.
Yeah.
That's the
all those
September.
rains and cold and all
Yeah.
that. All right. Tune in next week to the best of investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. Right on the money, baby. On the money.
All right.
Good one.
And then they